Hello everyone, welcome back to another video. In this video I'm going to be going over the balanced range and how you can use this to your advantage to take longs or shorts, and what rules I actually apply to these kind of scenarios where the market is very rangy and consolidating in between two prices. So here, this was yesterday, the 30th of September 2025, and you can clearly see that the market is rejecting right over here around the 1550s, or you can even say 16s. It's clearly rejecting every single time that it came to it, like 6 times almost. And you can clearly see as well that price is supporting here around the 700s to 98s, which is right on top of previous week Friday highs, right? So these are supporting all the time over here around the 6698s, and then we're resisting right over here. So this is clearly forming a balanced range. And what do I look for then? Well, I look to fade the extremes. What does that mean? I mean that I'm going to sell around the highs if there's rejection, and I'm going to buy around the lows if there's defense of the buyers. And what I usually then look for, if this holds, the bottom of the balanced range holds, then it's very likely that the balanced range high is going to get tested or visited again for then maybe a breakout or a rejection, and vice versa as well. If price goes up and rejects the high again, the other side, the other extreme of the balance range, in this case the balance range low, will likely be visited again, and maybe it gets defended or maybe it breaks down, and then you can do a break and retest trade. All right, so on this day both scenarios actually played out, which happens quite often, to be honest. So this is the whole pre-market, and we're gonna take a look now at market open. First of all, I'm gonna show you my pre-market plan right over here on X, which I share every single day. And the scenarios I was watching is a sweep below 6-700. I can show you here my pre-market plan just before market open. A sweep below 6-700 and 98 that holds for a quick scalp, or a sweep above 6-7-10 for pre-market highs where sellers rejected strong. That's basically just what I told you. That's what I'm looking for in a balanced market. So let's jump right into this, and you can see just the lines that I put here. This is at 94 right over here, and then you can see the one at 16. This is where I preferably wanted to sweep, but you can see this one right over here at 10, this is the one I was talking about. If that swept and then rejected quite aggressively, I would be willing to take the market short as well. Even though most resistance is here, this is basically testing the high more or less. Another piece of confluence that we had is on this day, which was a Monday, sellers were quite aggressive and gave this sell-off, which didn't give price a lot of time to transact in this area that was basically right above this resistance. So this is another piece of confluence that a short might work out right above these highs. So if we sweep above these highs and the resistance is getting tested, price comes into this low volume area, which you can see right over here on the volume profile. This is a low volume area where sellers were that quick and that strong, where buyers couldn't even try to defend it. Sellers just went straight through it. So there's a very high chance that when price comes back into that low volume area of Monday pre-market and market open, that sellers will reject that area again right above the resistance, picking up that liquidity above the resistance as well. So let's take a look at the first trade examples that we could have taken, or if you apply these rules, that you can take. So there was news today, or this day, at 10 a.m. Eastern time. So for me, that's 4 p.m. because I'm in Europe. And let's take a look at the first trades. So this trade right over here, as you can see, I'm on the 15-minute chart. This buy swept just under 798, like I told you in my pre-market plan. Just swept under there. So let's take a look actually what happened. And after sweeping over there, it swept above my 6-7-10 level, and then also gave a reaction to the downside. So let's take a look at what happened and what confirms I was looking at. But I just avoided it because news was going to happen in literally 5 minutes. So I stayed away from that because you never know if price hangs around your entry or goes in drawdown a little bit, waiting for that big news, and then you take an unnecessary loss. So I always stay away from news. But here you can clearly see we were hovering around the 700s, just above, and then you can see this massive spike down with a lot of aggressive selling, sweeping under that 700 and under that 98 level that I mentioned. And then you can see that sellers got absorbed, these bids got filled, aggressive buying started stepping in at the same time, and then a little pullback with much weaker selling if you compare this red bubble to the one that actually did the sweep. So sellers are not really trying or not being able to break this low. They're getting absorbed, they're getting trapped, and then aggressive buying steps in. So this is a perfect entry that you could take at the 99.50s with a 2-point stop loss here right below the low, and then you just ride that up and you target the nearest high, which was this one, 6710. So that could be like almost a 10-point reward for 2 points of risk. So that's a 5-hour trade that you have in an instant of 5 to 6 minutes on a normal occasion or in a normal scenario, right? Because here there's news, so the safest bet you have is at least going break even before news drops or getting out of your trade. That depends on you and on your risk tolerance. So you could have gotten in here long and gotten a 5-hour trade out of that. That was beautiful, very simple, just a clean rejection or defense of the balance range low. Now we're going to see the sweep that I was talking about and looking for as well, just after news. And this was a little bit difficult to read because there was a lot of aggressive buying, but in hindsight it's a beautiful entry, to be honest. You can just see all of this aggressive buying. Look at the massive green bubbles, and they're not really able to break past this high. And I personally waited for maybe the 16s to get tapped because we were so close, and that's what my preferable setup was in the moment. I didn't write that in my pre-market plan, but I saw that in the moment while micro was open. And here you can just see all that aggressive buying, but they're not really able to break the high, and they're getting absorbed as well around the balance range high and just above that pre-market high that I mentioned. So here they're all getting trapped. These offers are getting filled, and they're re-offering as well, defending or rejecting these 13s to 12.50s to 12. And then at the same time, like happened at the bottom, but just in reverse, aggressive selling is stepping in. They make this double top, and this is where you can take an aggressive entry at 11.50 with a 2-point stop loss again, targeting low day or just above low day if you don't want to really risk price getting defended here again. And you can just see, depending on your target, just above low day would have been hit right above this kind of market structure demand. That's where you can target just to play it safer. And that's, again, if you're short at the 11.50s and you're targeting around 700, let's say, that's an 11-point gain for a 2-point risk, which is even a little bit above 5-hour trade, which is incredible. What I want to show you now is that this balance range can give you so many opportunities if you adapt to the style of trading. Because these balance ranges, you need a very good entry around the high or the low, with a stop loss a little bit below the low or above the high. Just give it a little bit of room, because fake outs can always happen in these balance ranges, and you can lose a lot of trades if you're not careful and if you're not entering at the proper areas with proper risk. But if you play it right and go for these short, quick scalps, you can get a lot of good trades in here. So next trade, I just show you this one and this one. Next trade is right here, where the 94s could not break, and that was also in my pre-market plan. If they broke, I wanted to look for sales, but they were holding very well with buyers. So they swept under the pre-market lows, testing that balance range low again, and this is where an incredible buy occurred. So that's what I'm going to show you right here. As you can see, same story like last time. A lot of aggressive selling coming into the market, sweeping that low, and then they're getting trapped right at the low. They're all getting absorbed by these bids. All of these bids are absorbing all that aggressive selling, and they're getting trapped. And at the same time, aggressive buying is stepping in the market, and they make the market rally. Well, I was watching this personally, but I just wanted a deeper pullback to get in on that trade. So I drew my zone like this, where I want price to come back and defend this area. But then what eventually happened is price just came above the area and did not get a deep enough pullback. As you can see, this is a little bit sped up. The sellers were trying to break it down again, break down to get lower prices, and buyers were just able to defend that. For me, it was just a little too high. I wanted price around here, around the 96s, and then I would have gotten in to get a proper stop loss placement as well below the low, like I said, to avoid any fake outs. But in hindsight, this is not a bad trade at all. You could get in here at the 700s or the 99s after you see that selling is getting trapped once again and aggressive buyers are stepping in with a stop loss maybe below this low. So that's a great trade. And then you can just target around the highs again or just below the highs. And as you can see, market immediately flew up. There you go, boom. That's your potential target hit already around these highs. And once again, that's from 99s, let's say, an 11-point gain to the 10s for maybe 3 or 2-point risk. That's again a great trade. And now the last trade of this day that I want to show to you is the one just above the resistance that I told you about, around the 16s, into the low volume area of Monday, where sellers were once very strong, just to show you the reaction of how strong these zones can be if they are in the right areas with the right context and the right confirms, obviously. So price tested the low day once again after the trade that I just showed you, then rallied up once again. So you can just see how many trades you can actually take there. Like this low got tested 3 to 4 different times, and every time it gave a good reaction testing the high of the day. So you could have gotten 4 longs out of this if you wanted. I know that's unrealistic, but maybe you could have gotten in one of these at least to get a nice decent trade, or at least take some partials. And same for around the highs. Every time it got tested, buyers got absorbed and we tested the low again. So you could have gotten maybe 2 or 3 shorts or tried one of those at least. But then the cleanest setup of the day was definitely this one. As soon as price came in here, we immediately rejected, and let me show you how that looks on the book map. So here we're rallying up and we're going to enter this zone of low volume. Let me speed it up just a little bit. There we go. And now I'm going to slow it down. So here is where we come into that area of low volume, just above the 16s. And you can see all of that aggressive buying, right? With pumps entering that zone. These offers are getting filled. These buyers are pumping the price up. And now just waiting. We're in that zone already, and now it's just waiting for aggressive sellers to step in and to then take the market short. So here you can see buyers are stalling. They're getting weaker. You can see that. Look how small the green bubbles are suddenly. Look how small the volume is. Like, buyers are not able to keep this market pumping, to keep prices going up higher, and sellers are absorbing all of this buying. So the buyers are getting trapped right over here. Aggressive selling is starting to step in. If you're very aggressive, you could get in here at the 15s with a stop at the 18s, just below above the high, or you wait for aggressive selling to come in first and then reject once again, which maybe here is already a good confirmation for you. Let me speed it up a little bit. Just a little bit more. And there you go, the aggressive selling starts to come in. So this is a beautiful entry. Either you get in on the first drop or you get in on that second pop right over here. It's also very nice at the 1550s maybe. It's a little bit safer. And then price goes to just sell off. And I wouldn't target low day again. I would target more in the middle of the balance range, just to avoid any reversals or whatever. Like, it's a bit unrealistic if price goes that high to then test the low again. It is possible, obviously, but I would still play it a little bit safer and target like in the middle of the balance range around the 703, 705s, because you're in around 15s, which can give great risk reward. So here price is still testing that area. And I think now, yeah, now it's gonna sell off. So even this could have been an even safer entry. If you didn't want to get in on the first reaction, you wait for that pop over here, manipulating all of these highs, and then buyers get even more trapped. Another offer gets tested, and you can get in here. But then your risk to reward is a little bit different. You get in at 1150, maybe a 3-point stop loss here, just above the high. Your risk to reward is a little bit different, but that depends on your risk tolerance and where you want to get in. You might mentally feel a lot safer if you enter here at the 1150s than over here, because maybe you've taken a lot of losses this way, but that all depends on you. So let me speed it up a little bit more. And this is where we sell off. So that's the last example that I want to give of today. Just all beautiful trades. And this is how you can trade a balanced range. You buy the lows and you sell the highs. And that's basically what it comes down to. And if you play it right, you manage your risk, and you're confident enough, but you're also patient enough at the same time to wait for the good areas to enter from, then you can get great trades. And as long as you don't get greedy with your targets, then you'll do absolutely fine. So if you have any questions about this, about how I read these balance ranges or how I read the confirmations on the bookmap, let me know in the comments and I'll be sure to answer or even make a video about it. So yeah, like and subscribe, and I'll see you in the next one.